thanks for coming back to the continuation of this conversation. Of course, we started kind of big picture. We then talked about and dove in deeply with a number of fund managers. And now what we're going to have an opportunity to do is speak with a number of folks who really represent the investor community. And in similar vein, I'm just going to go down the line and have you each just say a quick word about each of the organizations and the work that you do, and then we'll kind of move into some questions. Then we'll also field questions from the audience and try and go for about the next 30 minutes or so. So please, Dana.
Thanks, Raúl. So my name is Dana Lanza. I'm the CEO of Confluence Philanthropy. We're a membership-based investor network of foundations, individual donors, family offices, and investment advisory firms. We're representing about $500 million in assets under management now.
Great. Julie.
Obviously, we all got the memo about
Billion, not
wearing
million.
what we were supposed to wear on the panel this morning.
Wow, look at that.
Wow, that's impressive. I'm Julie Shafer. I'm head of strategic philanthropy and purpose investments for BNP Paribas US, which here in the Valley you might recognize as Bank of the West. BNP is a very old French-based bank that's been involved in socially responsible investing for quite some time. So they brought me on about 14 months ago to build out their strategic philanthropy and purpose investment opportunities in North America. We trademarked the term purpose investment because I found that many people were put off by the term impact. As Raúl pointed out earlier today, we've got a language issue with our field.
So I am the co-chair of the New York State Microgrid Prize, which is certainly all about resilience, which I believe is why Amy has identified me that way. The prize is exactly what it sounds like. We have opened up to the state to go community by community to look at opportunities to build out the grid. And our notion is, first, we're looking at technologies and education. And it's particularly, I think, relevant for what we're talking about today because it's really a bottom-up approach. It's everything from how do transistors work to how do we actually look at long-term resilience, how do we get away from brownouts and blackouts and address water scarcity and some of the other issues. In addition, and if anyone would like to talk more about that, I'm happy to do so, just one-on-one. In addition to my work with the prize, I actually have a self-named firm, Davlin Development Group. And my partner and I work with entrepreneurs, specifically a couple families, on introducing them to the opportunities within impact investments, and also looking at how to balance their investments with their philanthropy. There's so many opportunities, PRIs, as Raúl had mentioned earlier, as well as strategic philanthropy. So we really try to balance the two. And I know we'll get into it when we talk more, but for us, the biggest piece is actually identifying the risk and really having the opportunity to talk to their wealth managers and their family members so they can understand how to get over the hump as it relates to risk and opportunity.
Great, thank you. So Dana, for those, we go way back, so know her story from the inception. So you started this thing, Confluence, right? In the early days of the formation of this industry, you brought together a whole host of folks, started off, conversations with foundations, and now has grown to include a community, foundations, family offices, high net worth individuals, and the advisors that serve them. So you have kind of a real bird's eye view into the perspectives, views, concerns, issues, challenges that many investors who make a decision to engage around resilience and sustainability and impact investing face. If you could summarize, kind of pull together, kind of we won't let them in top 10, but top 3 to 5 challenges that you find that the investor community that you work with closely feel are the impediments to them really deploying capital into the sector.
Now, just to know, I have no idea what questions Raúl's going to ask me, so this is more of a quiz than anything else. Well, I would say, so Confluence works broadly, and we help foundations figure out how to practice impact investing and family offices and donors. And of course, it varies significantly based on the asset size of the institutional investor and who their existing team is. So I think one of the first obstacles that families face is simply who's advising them. So we've very much been engaged, I mentioned this yesterday, in helping groups of people find the advisor that's right for them. And that's not an easy puzzle piece to fit, because sometimes you even have to go first into looking at examining your values and what's the change, what's the purpose of these investments, and what do you really want to do with them. So that can take one conversation, or it can take years. The second thing that I think that we're all very aware of, we talked about it a lot here, is just even once you're set up with the right team, issues around deal flow. We're trying to get, especially specifically from the foundation perspective, we're trying to get capital to places which have traditionally been marginalized from conventional finance, right? So we're looking at recreating a system to do that, or a series of systems. So, and then what does that all add up to? And that's where this whole metrics debate comes to bear, because people, it's not good enough to just say, well, we made a good investment. They want to know the kind of change they're making. Sometimes what's problematic, I think, in the philanthropic community specifically, is they're more demanding to see the kind of change their investments are making than they are really about the grants. So they'll give grants because they're coming from a place of generosity and charity, but on the investments they want to still see that performance. And their attitudes about that may not necessarily be congruent. So that's another challenge. And then the third thing, specifically on the issues that we're talking about at this conference around climate change, we have a working group called the Climate Solutions Collaborative. That's our most advanced program. It's more sophisticated investors who have a mandate to invest in climate and are situated to practice impact investing more broadly. It's very hard to do due diligence on a lot of the more technologically related deals that people are interested in, or they know they want to practice disruption and innovation, but who on their team has the expertise to do this, and who are the right partners. So there's a lot of, it's not so much even about risk, there's just a lack of knowledge about how to do this investing before you even get into the risk conversation. So those are just a few of the things. It's very early days in the entire industry of impact investing, as Raúl just mentioned. And we always tell people when they first get involved, because they think, well, once they get a new advisor, they'll be all set up. And you know, I say, welcome, you're a pioneer. You're a pioneer now. And they go, well, I don't know anything. Well, the pioneers didn't know anything when they came out here out west, but we're going to learn by doing. So that's how we start out.
Great, thank you. So Julie, you know, you talked about BNP. So here we are, a French bank, coming into now Bank of the West. I think you guys talked about, I wasn't there, but you know, Peter mentioned in terms of, you know, the European history and tradition that predates somewhat the movement here in the U.S., particularly around kind of sustainability, investing with a lens towards sustainability. So as you've now come in, as a French bank has come in to the U.S. market, and your role in doing this work, tell us about a little bit the unique challenges, opportunities that you're seeing in terms of working with the existing clients, and how you're using this with to perhaps bring in more clients into the institution and the things that you guys are doing.
Well, it does feel a little bipolar because when I'm working with colleagues overseas, as you can imagine, in the EU, there's an underlying culture of socialism. They may not identify it as socialism, but to them, socially responsible investing is just what they do. So when I am over there meeting with them, they're kind of scratching their heads at what we're doing, thinking, why is it so difficult for all of you? You know, and they've got that very haughty French kind of, thing going on. And I think at the same time, they're very envious because we have so many more opportunities than they do. So they want our opportunities, but yet they feel that they've got a leg up on us on the socially responsible investing. In terms of translating what BNP has done into the U.S., easier said than done. As a U.S. market, we can't invest on what they have on their platform. So what I've been trying to do with BNP is get the bank, and when I say the bank, I mean BNP, Bank of the West is part of BNP. It's now actually, as of July 1st, technically called BNP US, so you heard it from me. So I'm trying to get them to create a platform that is completely transparent. We are not putting any bank product on the platform. In terms of challenges, however, whereas in the global space, BNP Wealth Advisors, they're all over the world in something like 78 different countries. Wealth advisors here in the US are much more resistant to this idea of socially responsible investing or purpose investing. And so for the last 14 months, basically, I've been going around trying to educate wealth advisors on what these opportunities are. And I have to say, that I have found has been the biggest barrier. Even when clients are pushing for these opportunities, the wealth advisors are not acting on that.
And what, are they giving you any perspective on where is the resentment coming from, or the resistance coming from?
I think there are a few different things. First of all, and of course, these are gross generalizations, but many of the wealth advisors I've worked with have been in the field, the banking field, for a long time, and they're used to, giving out a toaster, right? And this is not the way the world anymore, and it's very difficult to get that type of mindset to change. Then you've got sort of a middle group that's thinking, maybe there's money to be made here, and I'm going to open up the door a little bit to that. What can you give me? What's quick and easy? And then there's a resistance, because I think, like most of us, we don't want to look foolish. They don't want to lose their clients by bringing up something that they don't know a whole lot about. So there's an enormous resistance there. There's a lot of miseducation and miscommunication that, as we've talked to a lot in just the last few hours, that there's too high of risk and too low of a return. Then, of course, there's the wealth advisors that are, that get it and are really excited about it. But my line, really, that I've told just about every wealth advisor is, either you learn to do this or you're going to lose your clients, because the world is changing. So I'm pretty, it's called tough love.
Excellent. As you mentioned, beyond that capacity, it's really the work, I think, that's relevant to much of this conversation, is the work that you do in working with families. Tell us a little bit about who those, not the names, but who those families are, what's led them to the conversation, and how it is that you're engaging with them.
Absolutely, thank you. First of all, I want to actually address something. Yesterday we heard so many fabulous speeches, Nancy, Peter, where we're talking about how, and today we heard Raúl, people talking about the opportunities that we have in the market right now and what's going forward, and where's the price of solar, the price of wind. I find some of the conversations bifurcating, because on the one hand we're talking about the success, but on the other hand we're saying it's a nascent industry, we're not there yet. And I think, my challenge is, it's, what's that thing? It's a dessert top and a floor wax, like it's both. Saturday Night Live, sorry, I blew that. But this whole idea right now of what's happening in the market is there is a lot of interest, and there is a lot of proven existing opportunities. I think, many people have been talking, we've been talking about SunEdison. It's awful what happened to SunEdison. If you look at where SunEdison started, really creating the market, and then made some very bad business decisions, it wasn't an impact or an environmental or a solar mistake they made. They got greedy and they didn't structure themselves correctly. And so my sense is this one organization can actually hurt us as we move forward. And so for me, when I sit with my families, the families that I work with right now are very entrepreneurial. They've created a widget, they're making their first money right now, and they know that they want to be in the impact space or purpose or so wherever we're calling it today, but they don't actually understand how it works. They don't understand that they can take the breakdown of a traditional portfolio, go to a Sonen Capital, and get that within the sectors that they care about. And part of it is the way that, first of all, there's the whole fact that we're all scared of investors and investments anyway. I've had the privilege to work with a group in New York called Plum Alley that is primarily a group of former Goldman Sachs and women from Goldman Sachs and Morgan Stanley, very successful women, who are creating a syndicate to help invest in women-owned companies. And even these women who have been so successful in banking go to their financial managers and say, this is what I'm looking for. I'm looking for impact. Even in my public equities, show me the index funds that I want. And their financial managers are pushing against them, and they're even thinking for a moment, oh shoot, well, they're probably right. And then no, they're not. So I think there's a whole marketplace right now where we know what we want to do. There does seem to be a barrier in the private wealth managers. So the question is, how can we work with them? And I used to work at a not-for-profit that looked at business solutions to climate called Carbon War Room. And I was the director of development. And I kept trying to go around the private wealth managers to go right to the family members. And it never worked. You know, I kept trying and it never worked. So finally, what I do right now is, if I can't beat them, I'm going to join them. So what my partner and I are doing is we're literally looking at specific opportunities. Silda had talked about, well, waste to energy, or she had a different term, but you know, we're working with a couple companies right now that do waste to energy and waste to fuel. And what we're literally doing is taking that company and deconstructing it with the idea of an investor who doesn't understand, well, you know, you're taking a plastic bottle that can only go into a landfill, that can't be recycled, but can actually be turned into an energy source. So how do we know that Republic is going to give us the 8,000 tons that we need? And how do we know that the off-taker, this cement company, is going to buy all of the product? And how do we know that it's going to replace 100% of coal ash? We're literally creating a methodology so we can sit with the family, the individual members, and their wealth managers and go through the project and go through the barriers and the opportunities. And some of this seems very self-evident, but to me, impact investing feels self-evident, and we're not doing nearly enough of it. There's too much capital sitting on the sideline, as we all know. And so for us, that's been the opportunity, is to literally take the families through the very, very basic questions, answering them, and then moving on to the next question. And you know, it's an if-then scenario. And that's been our way forward. Very much focused on clean energy investing.
Great, thank you for that. Dana, again, continuing along kind of the evolution of Confluence, you know, talk about, you know, what are some of the trends or, you know, demographic profile that you see in terms of who the type of asset owner that's not only coming to Confluence, but really coming to embrace and pursue opportunities around impact and sustainability?
Well, I think when we started out, we were seeing more, as you know, more smaller endowments. They tend to be more nimble. They also tend to be, I would say I'm making broad generalizations, but less staffed up in terms of creating specific program areas with different directors for philanthropic grant-making programs, so it's easier to change direction across the foundation. As many people in the audience know, a smaller foundation may have one managing director with an associate staff person or two. So in terms of getting into impact investing, it was easier to lower the wall, but just between the grant making and the thinking about investing. But now what we're seeing, I mean, really smaller foundations have absolutely been the leaders in impact investing. I'm talking about endowments of $100 million or less. I would say in the earliest days it was 50 million or less. And now we're seeing all the big foundations kind of getting into it. But that's really, I would say, more from peer pressure, because the smaller ones have led the way, and there's sort of this thing that goes on with, well, what are the big foundations doing? So we're seeing a lot of them set up special teams to figure out if they can invest out of the endowment, if they're able to do that. And then they're being more vocal about the performance of their program-related investment programs. In some cases, they'll talk about their program-related investment programs being now mission-related investing programs, because sometimes they'll take equity stakes in things that they wouldn't have, you know, a decade ago. So, so that's all great for philanthropy. The landscape is shifting pretty quickly, and everybody wants to have a voice in where it goes. So that's really exciting. In terms of where things go from philanthropy, one of the barriers that we have, and that we're talking a lot about specifically in the climate space, is if philanthropies can be catalytic investors and take a higher risk position or concessionary position in a company or in other kinds of deals, how do we actually scale to larger institutional investors like pension funds or even universities, sovereign wealth funds? We don't have those relationships in philanthropy. So that's one of the things that we're trying to figure out, again, specifically around the climate space, and one of the things I haven't heard a lot of great solution thinking around yet.
Thank you. So on the philanthropy side, you talk about big foundations now doing stuff and building teams. On the big financial institution side, we're seeing things, for example, last year, actually while we were at this forum, Goldman Sachs acquisition of Imprint, BlackRock making announcements. How does the field, as BNP, as a big bank, how are you guys thinking about that, and how do you view the other big banks now all taking stakes and making a claim and coming into the impact and sustainability investment industry, given that, again, your roots and tradition as BNP kind of predate a lot of that, but just curious from one big bank to other big bank reaction.
Well, I have to say, wearing my BNP hat, there's no question that BNP wants to take the lead on this. They, from the top down, from Paris leadership on down, about 3 years ago, they made a long-term plan to be the leader in this space. But as we all know, things in banks move very, very slowly. What I can say is that in the last year, they are walking the walk, even though it's taking far too long, as far as I'm concerned. There are a lot of banks out there that say they're doing this, but they're not. And I can honestly say that BNP is, so far, seems to be committed and doing the right thing. One of their main tenets in the bank overall is sustainability and resiliency. So that's very clear. They committed right at COP last year, they committed $18 billion to renewables, to invest in renewables over the next few years. They're really trying to make an effort. We're supporting Climate Week in New York. I personally, in my role, I'm agnostic. So as much as I'd like to say that climate is our issue, it's not. It's whatever our clients are looking for. And the bank, in terms of its own investment, is also agnostic. I mean, they're looking to make money, but they're open to those sorts of investments.
Great.
Well, I would say the only thing I would add in is that BNP is trying to be the leader as well in offering green bonds. I mean, they're about to offer one any day if it hasn't happened already. I frankly haven't checked my email. So that's one way that they're trying to move the market.
Great. Thank you.
Yeah, question. I had introduced myself as, I guess, the one skeptic in the room. I noticed the other questioners got up and introduced themselves, so I want to do that, and I have a question. I'm Bruce Johnson. I am a faculty member at the newly named Antonin Scalia School of Law at George Mason University. I have a PhD in economics and a law degree, so I'm a law and econ guy. I teach economics to law students, finance to law students, investment management to law students. We also have a program that I direct where we teach economics to judges, state and federal judges. We have about 140 judges come through a year, and also about 80 attorneys general. Very popular program, been around for a long time. I wanted to kind of just mention briefly the nature of my skepticism. It's not really skepticism. The term sustainability, at least in its analytics, is really nothing more than I understand in economics to be wealth maximization. I don't mean green piece of paper. When we have assets, one of our great assets is our environment, and what we want to do is maximize the capital value of that environment so that it sustains itself. And as a wealth maximizer, what would be the rule? You live off the income, you don't dig into the corpus, you preserve the corpus. That sounds to me like sustainability. Now to my question. One of my areas of research is on the Northwestern Coast Indians, all right? They are known as the salmon culture. You may have heard of something called potlatching, a reciprocal practice. It was very important to their culture. Our current salmon fishery along the Northwest Coast is in a shambles. We have species facing extinction. We have people in nitro-fueled boats out there commercial ocean fishing, speeding out to fish for salmon to get there ahead of the next guy. A classic open access tragedy of the commons, all right? My research shows that when Europeans first showed up on the Northwest Coast, all chiefs, all owned rivers. Why would you own a river? Because salmon spawn in the river, they go out to the ocean, they come back to the same river. I'm the first one to have suggested that the Indians actually husbanded their salmon stocks in a very efficient and sophisticated way.
Is there a
I know it's a speech, but I'm getting
It's really important, and a lot of people have huge passion around it, so I appreciate it.
Can I ask that
a
question now?
That'd be great. Yeah. Thanks.
Okay, so one of the problems in Indian country is there are deals that could be efficiently done, but they can't get done because of their inability to borrow. What progress can be made or has been made or is on the future on that subject?
Oh, that's a great question. Confluence has 5 working groups. The first one we ever started was called the Native Green Fund, and it's explicitly focused on how do we bring these impact dollars to Indian country. We're mostly focused in New Mexico and Arizona, but it is such an intractable issue that we've gained attention nationally from funders and tribal leaders around the country and convened a group around that. It's really hard, and as I'm sitting here and thinking about the conversation over the past day, it is really important to indicate that when we use the term impact investing, we're sort of using it now sort of generically in these conversations the past couple days. But again, to the point about the big foundations, they're really looking at true impact in the sense of, again, taking these higher risk concessionary stakes, and then there's the more other end of impact investing. Again, Confluence considers the whole spectrum, but there's also more responsible investing like our green bonds, ESG, and all of that. So specifically, deals in Indian country, next to impossible to make market rate investments. Very few, no publicly held companies doing anything good in those communities. So, so it's really hard for an investor to do positive things in those communities. Specifically, what needs to happen is a lot of capacity building to happen for native-led CDFIs, for tribal leaders, for communities that even want access to this kind of capital. Because tribe by tribe, you find some of them saying, thanks, we're happy with our indigenous economy, we want to herd our sheep, and we don't want to have anything to do with your Western economies. And then another, group down the road will say, we're all about it. We have a casino. We want to develop our community. We want to send our kids to universities, et cetera. So it is complicated, but I think what's most important about working in tribal communities is that the problems they face are the same problem that sustainable fishermen are facing, the same problems that farmers are facing, the same problems that entrepreneurs are facing in the inner city. These are all groups who have never had access to really any kind of conventional capital. And now people that are really thinking about impact are thinking about how do we make instruments to get to these places, and how does the overall system, economy, need to change to make that happen?
Great, thank you. And just to clarify, CDFI stands for Community Development Finance Institution, to make sure language. Amy, we need to wrap, right? Yeah, so sorry to cut this conversation short. I believe everyone's going to be around for the next day or so, so please, thank you all again for your questions and participation. We hope this has all been very helpful.